which I can't think of, is never discussed either at home or in school or in college. It's not taught in any course or degree. It's about money. In a typical middle class family, there's a little shyness about talking money with the kids, and I'm sure maths in the school and same with the college, whether you go for a management or anything else. That is what you're taught there is for a corporate and all how it works and how you manage those part of it. But what is money then from a personal perspective, how to view it, how to plan for it. In the end, we because not necessarily we may not call it money, but we need incomes to support ourselves, our families, and whatever we want to do in life, it requires money. So there's no beating around the bush and coming to that part of it. So here, no, I mean, rather, besides what I try to explain, I would request each of you to read a couple of books, and these are very small and interesting in a storyboard kind of books by Robert Kiyosaki. First book is Rich Dad Poor Dad. Well, it's not meant to make fun of your father as to why he is not rich, but yeah, it is uh, basically goes about to teach in a real life kind of scenario where uh, someone with the money, how they treat it and how they talk to their kids and how they view life and everything around that. And on the other hand, honest but upright at the same time, not very rich. Poor doesn't necessarily mean below poverty line. Who doesn't have too much money, how there is a hesitancy in talking about money at home with the children, and how they go about decisions that affect their financial well-being in the long run. So those differences are brought out beautifully in that book, and you should read it. You'll find it fun, if nothing else. And in the process, if you learn something that is useful for you, that'll be great. The second very important book is by the same author, Robert Kiyosaki, is Cash Flow Quadrant. This is something which I'll take some time to explain what he tries to cover in that. A quadrant basically is covering four ways of how you make money. Just before going there, one of the aspects to remember, our basic problem starts with we don't know what is asset and what is liability. There you may, at a first point, may not disagree with that. You say, "Oh, I know what is asset and what is liability. If I have a loan, something that's liability. If I have any asset like a car or a bike or a house, that is asset." That's how I would have defined it, and that's how I'm sure most of you would do that. He explains it in a different way that anything that gives you cash is an asset, and anything on which you have to spend money is a liability. Now just think of it again. The same things what we called assets a minute back. A car or a bike. Does it give you any money? It doesn't, unless if you are a Uber or a Ola driver. Okay, so what I mean is, in a year, just to own that car, you, if it is a new car worth, say, for example, 10 lakh rupees, about 1.5 lakh or so will be the depreciation itself in a year. That much money is going off. Two, you have to pay annual insurance or something, maybe say 10,000, 15,000, whatever the amount. You're paying tax on that, insurance amount on that. Road tax you're paying, insurance you have to pay every year. And then due to wear and tear, depreciation is there. And even to use it, you need to put fuel, which is another expense itself. So, so what that means is your money is not appreciating, nor is that what you are thinking as a asset is not giving you money. You actually you have to spend money on that. So by that definition, suddenly you have to take your car or a bike under the heading of liability, not your asset. Say if you have a fixed deposit in a bank, for example, that is paying you some interest, high or more or less, but some amount is coming to you. You don't need to spend any money on that. So that can be called a asset. Similarly, if you have a house, but say you spent X amount of money, assume you took a loan on that, so you're paying interest on that, and you're paying property tax on that. And if you're spending some money on maintenance, something, then all that is a cash outgo. We don't see anything inflow. On the other hand, if it is like a ready house, but you're getting income out of that, it's you rented it or is it be it a commercial property or say residential, you rented it out and you're getting certain income from that. And if that income is more than your expense, in the expense you also take the cost of if you're paying interest on the loan. Then if you have a cash adding up, so end of the year you can say that okay, this 50,000 or a 1 lakh is my income from my house, which I can deploy somewhere else. Then your house is a asset. Any other way you're doing that, then you're actually building a liability, or at least that stage it is a liability. And if you're on loan, typically that house will remain a liability for 20-30 years. So that basic differentiation between asset and liability itself shakes up things, because we are who are not rich and typically from a lower middle class or middle class tend to think that okay, asset means we'll have a car, we'll have a bike, or we'll have a house, maybe plot of land somewhere. Seriously, it is a liability because it doesn't pay you income. I mean, in some areas or in certain period of time, the price may go up, and then you may get some capital gain out of that. Then maybe at that point you can look at it as okay, it gave you gain. But having something, it is not a asset. So what this teaches you as a philosophy is that you need to have deploy your money in ways that it start giving you money. You shouldn't have to build things on which you have to keep spending more money just to keep the ownership. Then that is a liability, not a asset. So if you get this part ready, so what it means is then you start building actual assets, which will then keep giving you money. So one is your effort, that is you do a job or something, you get money from there, but your money which you have earned and saved from that, it is also giving you money. That should be the scenario which you should be aiming at. So now coming back to the cash flow quadrant, he as the name quadrant says, he showed 4 ways how money can be made. And these are through ways which I'm not talking of any illegal means, legally how people make money. And in that, so each one fits into one of these 4 quadrants. First one is a salaried person or an employee, someone who does a job. So there, what are the characteristics of people in that quadrant is they get paid for their time and effort. How long do they get paid? They get paid as long as somebody is working. So here, just put aside a specific nature like you're serving in armed force or something, or a government job. So if something happens, a salary may continue to the family, or a pension may be there after retiring. But take this as a singular or very small percentage of the category. Most of the jobs today don't give you any security beyond when till you're working, and they don't include any pension. So most of the jobs except the government jobs. So we'll take that for the learning purpose, that what does the employee get as long as he works. If say health incident happens or something happens to that employee, the income stops because that employee is not giving that time and effort any longer beyond that part. Or even if he or she is willing to give time but can't give the results that the employer desires, the income ceases completely. There is no job and there is no income there. That is the main characteristic of it. It is usually considered more secure because somebody else is taking the risk and paying you salary. And naturally, someone will pay you, say, whatever amount, say 50,000, 1 lakh, only if you are worth higher than that. Right? Nobody will say give you 1 lakh rupees to take a output of 30,000 rupees. It could be other way around. They'll pay you 1 lakh rupees only if the work that you're doing is worth 3 lakh rupees. Because from the difference, that 2 lakh rupees, there would be the cost of finance of setting up that operation. They need to pay that, and then there is a support staff because you are not the lone person working in that organization. You're able to work because there is some support element. For example, like you're a software coder, then there is a HR team working, there is an admin team, there's a housekeeping team, then there is a establishment cost, there is a sales team. Without sales, there'll be no revenue or nothing for your work. And management team, all of these need to get paid. And so a pro rata part of the income generated by your effort goes to pay all of that. So if your work is worth X, that value also, to be fair, is created because all these support elements are there. If you just at home and do the same thing, you learn nothing from that. So, but you need to understand the nature that a job will pay you as long as you're working. For some reason, health doesn't permit you to work beyond, your income stops. Next part, can you say pass on your job to your child? No, it is not hereditary that they by right can get it. A government job may give, but even there are qualifications. Only if the person is qualified can they take. And if it is a more private job, I mean, a child has no claim on your job. So it is not an asset that you can pass on to your next generation. It gives you income, all right, as long as you are able and working. Then next part is say self-employed. Say you are a chartered accountant or a doctor or whatever, engineer or something. If you are practicing on your own, for example, you take a doctor. If a doctor is working in a corporate hospital, then the person would come under category of say employee, the first quadrant. But if the same doctor feels that, okay, I have a good enough name in my community, I'll get patients by my name, so I'll spend some money, set up my own clinic and run it. Similarly, a chartered accountant, instead of working in a corporate or a chartered accountancy firm, sets up their own office. So office doesn't mean they need to have staff or a lot of space and all. So they are working for themselves. Then they come under the category self-employed. A doctor can be self-employed by setting up their own clinic. Chartered accountant can set up their own one-man firm or together with somebody else. I'm not adding the together category or a large setup where it would go into a third category of business. In the second category, self-employed. One or a very small team working together. Basically, income is coming from the effort of the same person. But the person, instead of working for a corporate, is working for themselves. So here are two things. One is that whatever worth of your work and efficiency or qualification, you get that whole money. So it is little better than the employee part, but it has its own downside. As in, of course, also need a support system. If you get a lot of clients and you are able to charge a premium, if your reputation is good, then you will get a higher income than being an employee somewhere. Because if you are the same doctor is working in a hospital, but a hospital makes 5 lakhs, then the doctor may be getting 1 lakh from that. I'm just giving a ratio. I don't know the salaries. The same in every field. Whereas if the same doctor sets up the own clinic, but it's not that that will be free. Maintaining that clinic and having some staff to support and all, it may cost 1 lakh. Then maybe the rental and electricity, all these things may cost one more lakh. So still out of 5 lakh, even if you take out these expenses of 2 lakhs or 3 lakhs, you still get 2 lakhs. That is more than what you would get as an employee. But here, other character is even this can't be passed on to a next generation, to your children. Simple logic, you can pass on the clinic, but if the child is not a doctor, it is of no use. And also, even if a person is a doctor, a lot of time we hear that the senior doctor has addiction because of which they were getting that, say, patients and that business. If the son or a daughter doesn't have the same ability or reputation, business can just go out of the window as soon as something happens to that. Similarly, if it is a chartered accountant, it will run as long, or a lawyer, it will run as long as that person is working. The moment that person is not working, for example, takes a leave and goes for a 2 weeks tour to Europe, in those not 2 weeks or 2 months, in that period, there will be no income. It would stop because it is self-employed, so it is depending on the individual to work and generate that income, and it can't be passed on to next generation. The third part, the third quadrant we can say, is business. What is the nature of businesses? Typically, business is leveraging work being done by a number of people. Just as if you're an employee, you are one of the employees, like you're making say doing work worth 3 lakh rupees, you're getting 1 lakh rupee. Like that, if there are 100 people like you, so 100 into 3 lakh, 3 crore is the revenue of that company in that month. From that, say if they're saving 50,000 rupees, for example, every month in 2000, that is the income of the profit of that company. So every business is supposed to make a profit, so they'll be looking to make that profit. How do they do that? Instead of one individual working by themselves and generating some higher income, like in a self-employed, here you make a number of people work on that. The numbers need not be in different categories. If it is a blue collar worker employees, then per employee productivity may be lesser. In some high-tech jobs, the per employee productivity may be higher. But logic remains the same, that the business leverages effort and time and capabilities of number of people and gets a share of that, which gives the income to that company. And how long does business last? What happens if the owner of the business health is spoiled or not able to work or passes away? Typically, it shouldn't make a difference to the business because there would be a management team and all. So the business should still continue to function, and maybe someone else will be hired in that place to head that or do a specific function in that. Because all business owners need not be working in that or running that company directly. Even to run that company, they can employ somebody as a CEO or a director or a managing director, whatever positions. Like for example, all these startup groups are there. So the owner of this Tata group, main shareholder, Tata Sons, they're not running any of the businesses. They're hiring a chairman for their group. Similarly, they have hired directors for the Tata Sons. And from there, they also have people working and leading and heading, taking all the decisions for the group businesses, be it a Tata Steel or a Tata Motors, like that. It need not be always a group, even a single company. As it grows, they will be having a number of people in the top management, and they can always hire someone new to run that. So that is, business should have continuity, and it should be, or it could be working eternally as long as possible. So someone, even if it is a owner, their health or a death also will have no impact on the business. So what that means is, if somebody is in that cash flow quadrant, third quadrant, that is the owner of a business, there, I mean, person dead, of course, the family would continue to get income or profits, whatever are being generated by the business. It can be legally be passed on to, inherited by the children, and they would have the same rights that a parent who set up the business has. And it is an independent legal entity, and certain tax advantages also get worked into that. So business is in a next level of actually generating money, because here, if you are running it effectively, if it is a good business, it grows much bigger, gives a lot of money. You can have more and more people working for that and contributing to creating money for you. So it is a great asset. That's the third quadrant. The fourth quadrant is the investing. In this, what you are talking about is, you don't even set up a business, you don't even own a business, but what you do is you invest in businesses that are running or being set up. So you heard of all these things like angel investors who invest at an early stage, then you have venture capitalists and all. Then you also have stock markets where companies need fund, they list their stock, do a IPO, get funds from there. So the people who are buying that shares are buying a part ownership of that share, that company. So it doesn't always need to be like as a VC or a PE kind of thing, or making direct investment. Even if one is buying a mutual fund is buying shares of companies. So people in the fourth quadrant have investments, and their income primarily comes from that investments. What that means is, if I have some shares of Reliance or HDFC or a bank, and like that, Infosys, TCS, all of these good stocks, I get an income. That is, they would be dividends that these companies pay out, and two, sometimes they give bonus, and the share price goes up. So the share can be called a asset because it is generating money. After you purchase that share, you don't need to be spending any money on that. There is no annual fees. Why I'm saying that annual fees is, some of you would say that I have a Mahindra holiday, that is an asset. Or you might have paid 1.5 lakh rupees for that. It doesn't give you any income. And instead, every year, even whether you take a holiday or not, you have to pay some maintenance fee. So, what would you get the asset? It's definitely not asset, it's a liability. Whereas you purchase these shares, some will pay high dividend, some will pay low dividend, but some income is coming. And then the value of that asset is also over a period of time growing. That is, if you have invested the right stocks. And even if it is bad stocks, you're still not spending money on that. You may lose certain money that you invested into that. So ideally, the best and other benefits of this being in that fourth quadrant investment is that it has no life. I mean, it can continue as long as those businesses are there. If not one business, even other businesses are there. You continue to get that. So, and it also can be passed on to your children. If a parent owns a stock, they can will it to them, or otherwise also they'll inherit that and can be passed on, and they can pass it on to their children. So this is a asset whose life or income doesn't stop the moment the person who purchased that share, something happens to them. Where does that come into effect? In quadrant 1 and 2, as an employee and as a self-employed. Idea here is not to say that, oh no, you shouldn't be doing job or something, you should become a straight away investor. To invest, you need to have some income, or you should have inherited wealth from your parents or grandparents. Or everyone can't be setting up a business. Even to set up a business, you need to learn. So probably you'll be working somewhere. It is not to say one quadrant is bad or other is good. Idea is to tell you nature and characteristics of each quadrant. That is explained beautifully in that book. So you are at least aware where you stand, and if possible, what you could be doing. People in quadrant 1 should be looking at going to quadrant 2, and quadrant 2 should be going to 3, or even 1 can directly go to 3. And everyone in 1, 2, 3, or should start investing something. That is, everyone can become investor. You may be in quadrant 1 as the primary income, but if you're putting some money into investment, you also become a partly into that quadrant 4, which is a smarter way. So over a period, you build that a core or a certain amount of wealth and investments there. The income from there will keep increasing. Then at some point, it will become substantial enough that you are no longer dependent on having to work in one. Even if your income from quadrant 1 stops, you have adequately covered yourself for future requirements through your investments. So this is the whole logic of that cash flow quadrant. This is a very small element of, say, money matters, but I thought you should know that, and I hope you enjoy this. Thank you for watching this.